What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If you're new to our channel or if you've been checking out our content, make sure you hit that subscribe button as well as smash the like button. It helps our content reach a wider audience and we greatly appreciate the support. So yesterday, I finally received my Capital on Tap business credit card in the mail. So for today's video, what I wanted to do was do a comparison between Capital on Tap and Divvy. So we have a corporate Visa card and a corporate MasterCard. So I wanted to lay out some of the differences between these two cards. In my opinion, these are probably the leading FinTech business credit cards for small businesses. Now you do have Brex and Ramp, but I'm talking mainly for smaller businesses. You have Capital on Tap and Divvy. So Divvy's been around for several years already. They're pretty well established. Capital on Tap has been around for years as well, but they just launched in the United States a couple of weeks ago. I wanted to do a compare and contrast and lay out some of the similarities and differences between Capital on Tap business credit card and the Divvy corporate MasterCard.
All right, so let's look at Capital on Tap Visa corporate card versus the Divvy corporate MasterCard head to head. So I've chosen several different categories to compare these two. So let's start first with the underwriting. So one thing you have to realize is that these two credit products have completely different underwriting processes. Divvy is using the Plaid platform, so they're looking into your banking activity to see what type of income you have month over month. Capital on Tap is doing a soft pull of your personal in business credit profile. So they use the Experian FICO 8 and they're looking at your personal and business credit scores. It's just a soft pull and it's stated income. So on the application, they ask you what your monthly income is. But with Divvy, they're actually verifying what that is through your banking activity. So these are two different underwriting processes. If you're someone who might be limited in terms of your business history, but you do have good personal credit, then Capital on Tap might be a little bit easier. Divvy, on the other hand, if you have great banking activity in your business bank account, but let's say your credit isn't all that, then Divvy might be a better solution. Now, remember, Capital on Tap is going to be looking into your personal credit, whereas Divvy is not going to be looking into your personal credit for underwriting. They do a soft pull for verification, but just realize that the two underwriting systems are different. So depending on what your strengths are, I mean, both of these might be an option for your business. Let's look at personal guarantee now. One thing I wanted to clarify between both of these cards is that there is a personal guarantee. Even though you're not getting a hard inquiry, it still is a personal guarantee. Now, that's one of the biggest misconceptions. I just wanted to clarify that because there's a lot of people who think that because it's not a hard pull, that means there's no personal guarantee. There is a personal guarantee with both of these credit cards. And the reason why I know this is because I've spoken to both representatives and they both said the same thing. So this is a personal guarantee, even though you're not getting a hard inquiry on your credit. Now let's look at expense management. So as you all know, Divvy has a lot of the bells and whistles when it comes to the expense management platform, being able to integrate your QuickBooks into that and categorize expenses, create virtual cards. Divvy, I would say, is much more of a technology platform. They both offer access to credit, but Divvy also comes with this tech platform that allows you to control all your expenses. So that's one of the big distinctions as well. Now, one of the biggest distinctions between Capital on Tap and Divvy is their repayment schedule. So Divvy has a pay in full model, either monthly, bi-weekly, or weekly. Capital on Tap, on the other hand, you could pay in full monthly, or you could pay 10% minimum of your statement balance. So Capital on Tap actually offers much more flexibility for business owners, in my opinion, because you can revolve the balance a little bit longer. So you have much more time to deploy your capital. Whereas with Divvy, you know, at a minimum, you're going to have to pay your balance in full every month. So, you know, you might use Divvy for more short-term types of expenses. Whereas if you know you're going to need the capital for, you know, a couple months or a couple statement cycles, then Capital on Tap just offers a little bit more flexibility. And I like the fact with Capital on Tap, it's a minimum 10%. I think that's a fair percentage of your balance because, you know, with regular credit cards, you could revolve your balance indefinitely and just pay like, you know, sometimes as low as 2%. But at least with 10%, you're not getting too far over your head because you will have to pay back a decent portion of your balance every statement cycle. So you're not going to get too out of hand when it comes to the debt. With Divvy, of course, you're paying it off in full. And the more frequently you pay off your balance with Divvy, it's the less risky you are. In terms of the limits, the Divvy corporate MasterCard goes as high as 400,000, whereas the Capital on Tap Visa corporate card goes up to 50,000. Now, the max limit and the pay schedule actually goes hand in hand, and they're inversely related to a certain degree. So the shorter the time window to repay, the higher the limit, because it's less risk to the lender if you're getting paid back in a quicker time interval. Whereas if you're revolving a balance out a little bit longer, then that's more risk to the lender. So the limit's going to be a little lower. And now, one thing I will say about the $400,000 limit with Divvy, most businesses aren't going to qualify for a limit that high. As a matter of fact, just from some of the internal metrics that I have based on the approvals, the average line size was only $8,000 for the Divvy MasterCard. Now, in terms of the interest rate, Divvy, you're not paying any interest because it's paid in full. Now, Capital on Tap also offers a pay in full option where you're not going to get charged any interest. However, if you do decide to revolve a balance, you will pay an interest on that balance. And that interest can vary. But if you do revolve a balance with Capital on Tap, there is an interest that's applied to whatever amount that you're revolving. Look into your credit card disclosures to find out what your interest rate is if you do decide to revolve a balance.
All right, so let's recap some of the differences and similarities between Capital on Tap corporate Visa card and the Divvy corporate MasterCard. So when we look at their underwriting, they have two separate underwriting processes. Divvy is looking into your banking activity through the Plaid API. We've talked about this before. They're analyzing your banking activity to underwrite you for a credit line, whereas Capital on Tap is actually soft pulling your personal and your business credit in order to qualify you. And it's just stated monthly income. So on the application, you put in how much you make per month. Whereas Divvy is actually verifying that through your banking activity. Capital on Tap is just stated monthly income, but they are soft pulling your personal credit and your business credit. Divvy isn't even looking at your business credit whatsoever, but they are soft pulling you not for the credit decision, but for verification purposes. So those are going to be some of the differences when it comes to the underwriting. When it comes to the max limit, now Divvy goes all the way up as high as 400,000, whereas Capital on Tap taps out at 50,000. Now, the biggest distinction I would say is with their repayment options. Now, with Divvy, you do have to pay in full, either monthly, bi-weekly, or weekly, whereas Capital on Tap is unique because they allow you to revolve up to 90% of your statement balance. So the minimum amount that you have to pay is 10% of your balance. So I think Capital on Tap offers a little bit more flexibility with their repayment cycles because you're only paying a minimum of 10% of your balance if you want to. So with Divvy, you have to pay it off in full. So there's not as much flexibility in your repayment terms with Divvy. So that's one advantage I would say Capital on Tap has over Divvy. And then the last distinction is that Divvy has a much more built out expense management platform. So if that's what you're looking for, I think Divvy is going to have an advantage in that regard. There's advantages and trade-offs with each of these credit products. If anyone's interested in applying for either the Divvy corporate MasterCard or the Capital on Tap corporate Visa card, I've posted links in the description of the video. Let me know your comments and questions right down below. Until next time, y'all take it easy and we'll talk to you soon. Peace.